Eqstra's first half headline earnings per share increased by 18.3% to 36.8 cents. And joining us from the JSE to unpack this result is the company's CEO, Walter Hill. Thanks so much, Walter, for joining us this afternoon. Let's get straight into things here. I mean, the company managing to grow its earnings in an environment that's been characterized by continued economic uncertainty. And it seems that it's the mining sector that's providing some of the underpin for the numbers that we're seeing filter through this afternoon. But a distinction needing to be made between your exposure to the South African mining sector as opposed to the kind of exposure you have in Mozambique.
Yes, we had good exposure and improvement from the Benga coal project in Mozambique in that production is ramping up, and we also benefited from the weaker rand. It's a dollar-based contract and the conversion against a weaker rand also benefited us. On the South African front, we have been exposed in the Bushveld complex on our platinum projects. We have been impacted by industrial action that has negatively impacted the local market's earnings.
Yeah, but one of those sectors within the mining component that's been affected by industrial action is the platinum space. And, in the past, the platinum space has always provided that muscle for the Eqstra group. The last time we chatted, you mentioned that there was going to be somewhat of a shift in focus to coal with your platinum contracts ending. What kind of progress are you seeing on that front in terms of the shifts and the strides being made within that exposure?
We've definitely shifted. Coal is now 42% of our commodities, so we have achieved the shift that we wanted to, and we're comfortable with our exposure currently on platinum and hard rock contracts. The platinum project, we have rationalized that project. A lot of work has been done on the labour front to normalise. Currently, we've got good relationships. We have stabilised the situation, and we've also relinquished certain activities on the platinum that were loss-making. The reefing and the drilling activities we have handed back, and platinum is using other suppliers whose equipment is better suited. The ore body was a fragmented ore body, and our equipment was too big to handle that type of ore body, and that has been relinquished and will benefit us in the next 6 months.
Of course, that's not the only division within the company where we're seeing changes being made with regards to strategy, Walter. A lot of rationalization taking effect as well, specifically when it comes to the construction and mining equipment distributorships division. We've got the sale of Bicarus coming through to Caterpillar, and that a deal that the company is looking forward to. Can you provide us with clarity on that front and just how soon we can see a hiving off of that division?
I think with Caterpillar buying out the Bucyrus product range, we will be selling our Bucyrus Mining Services division to Caterpillar, and that deal is in the final stages of contractual completion, so the announcement will be imminent. It will entail the transfer of all our staff. All our contracts will be transferred across, and we will be paid for our assets and an element of goodwill. We will make an announcement to the market once the deal is signed, but it should not be many weeks away. It's very close to conclusion.
While we've got rationalization happening in that division, it contests against some expansion you're seeing in the business as well, and a new focus area coming into play within the passenger and commercial vehicles division of the business, and that's an expansion into logistics. You say that it should enhance its value proposition, the company's value proposition to customers. What exactly are we looking at there?
I think in many of our open cast mining contracts, it is often requested that the road transportation of the commodities. We have never been able to offer that service as part of our overall contract, and we brought that into the fold. It's progressing very well, and we are into commodity transport, primarily on the coal fields, and then also into dry bulk transport, which integrates very well with our current business.
Okay, so that some of the changes we're seeing in terms of targets being set. I mean, you've highlighted in your commentary that you're keen on generating acceptable returns for shareholders. Run us through some of the targets that you've set out and what's deemed acceptable right now.
I think on a see-through base, ultimately, it's the consistent return on equity. It has always been our stated ambition that Eqstra should deliver no less than 20% return on equity. We've improved that figure back up to 15%, and it'll be a continued intention to be able to maintain it above 20% through the cycle. I think also we have, at the last financial year end, we started paying dividends, and I think it's a primary objective of ours to maintain a dividend cover of 3 times on an annual basis. So that is a primary objective that we're driving to return value to shareholders.
A lot of that will depend on the outlook ahead, Walter. I mean, what's that looking like right now? And could you give us a hint as to the pipeline of contracts that you're looking forward to?
Our order book right now is at a healthy 18.4 billion rands, which is very acceptable for a company of our nature. The outlook globally does not look very positive. I think all indicators are that we are going to have a lot of turmoil and volatility in the global market. However, I'm comfortable. The Eqstra balance sheet remains very strong. We do have market leading positions in all our businesses, and we have got very healthy cash generation on an annuity basis that will see us through further market turmoil. So although we see signs in global volatility and turmoil, as a group we are very comfortable that we're well positioned to handle those.
And that translates to your operations in the UK as well, Walter, because I mean, looking at the business in general, you're feeding off some of the economic conditions that prevail over in Europe right now.
Yes, in the UK we are definitely seeing a decline in the economic activity. We are, however, advantaged in that we're coming off a very low base. We have become the Caterpillar forklift distributor in the UK. We've got the whole of the UK and Ireland market, whereas previously we only had 50% of our previous OEMs market. We've now been given 100% of the market, and we are, contrary to the general market, we are actually seeing a lot of momentum there. Off a low base, we are gaining market share, and we are well positioned in the UK to benefit from that.